G'day MegaWhale team. We're going to be taking a look at a rising wedge pattern today. This is going to be a part of our new series teaching you guys how to trade the markets. This series is going to include a range of short, sharp, detailed analyses and videos on market patterns, candlestick patterns, and different types of technical indicators. How to identify them, how to use them, and how to trade them. So our first video, like we mentioned before, is going to be all about the bearish pattern, the rising wedge. So we'll show you what a rising wedge looks like. So there's two key characteristics of a rising wedge. First off, it has to be in an ascending pattern, meaning the price has to be rising. And second off, it has to be converging upwards. What does this mean? This means that the distance between our top of our trend and the bottom of our trend shrinks as the price increases. So greater distance here, smaller distance here. So generally when we see a rising wedge in a market, we'll see a few things. We'll see the prices either enter in and continue, or we'll see the prices enter from the downside and continue. It doesn't matter which way the price enters, the rising wedge is a bearish pattern. I think statistically it has about a 68% chance of a break downwards, thus it being bearish. So let's take a look at a real example on the Bitcoin chart. So if we use the Bitcoin chart and we take a look at the March to April section in 2021, I'll give you a quick second, pause the video, take a moment, see if you can actually identify the rising wedge before I input on the chart. So if you're able to do that, that's awesome, great job. If you weren't able to do it, no matter, we're going to show you here anyway. So let's go ahead and input our rising wedge now. We have our top trend line. And we have our bottom trend line. There it is. So another key characteristics of a rising wedge is to identify the strength of the wedge. Now the strength of the wedge is determined by two things. First off, the time. So how long has the price been traveling within this range? How long has it been consolidating within this market pattern? For example, a 4-hour wedge is going to have a higher failure rate, meaning that it's got a lower chance of breaking to the downside, a higher failure rate than a 3-week wedge, or a 4-week wedge, or a 2-month wedge. The greater the time, the more strength, or more, I would say strength, the more strength that the market pattern holds. All right, if we start breaking it down to smaller time frames, we see these patterns break more often than not. But in the larger time frames, they hold a little bit more validity and they're a lot stronger. So we can see over here, this was February 17th to April 20th. So about 2 months, a 2-month wedge. All right. The second identification of a strong rising wedge is 5 separate trend touches. So we have 2 trend touches at the bottom and 3 trend touches at the top. All right. So there's our 5. That's our second most important feature. So guys, there you go. We can identify a rising wedge, we can find one on a chart, and we understand how to identify whether or not it's actually a rising wedge and it's a strong rising wedge and it's going to be a successful wedge or not. So next we need to identify how can we trade rising wedges. So there's 2 methods we use to trade a rising wedge. Of course, you can swing trade it, but we're not going to be talking about that today. We're just going to be talking about macro moves. So the first macro trade we can use method is a ratio analysis or a ratio move. So a ratio move is determining identifying the distance between point B, what we call this point B, and point E. All right, so the top and the bottom. So all we're going to do is we're going to apply a measured move down 33%, and we will assume the bottom of this drop will be at this point. We can see that following this method, we did see the price actually reach this point, and we did see a bit of support here identified by 2 green candles, but at the time the market was in a pretty large amount of fear and a lot of selling pressure, so we did see ultimately a crash lower. All right, doesn't matter. Overall, what 33% predicted, really good job by that. All right, the next method we have it's called a method called we'll call it a measured move. So the measured move is going to be taking the distance between the top of our trend and the bottom directly downwards. Let's color it in yellow, orange. All right, so we've got our distance. We're going to now apply our distance to the top, so point E, and that is going to predict that we will see a drop. I think it's about 26% down to 47,600, and look at that. We hit 47,600. So overall, the measured moves in any market pattern when you're analyzing potential directions, measured moves are going to be a little bit more accurate than ratio moves. So generally I prefer to stick to measured moves, but always keeping in mind both, because the more information you have, the better you're able to predict possible directions. All right guys, I hope you learned something from the video today. I'm trying to keep these real short, real sharp, just a key bits of information. If you have any questions on this, go down in the comments, drop a comment, let me know what you think. If you want more detail, let me know for future videos. If you want it to be even quicker, again, let me know for future details. I'm trying to make these as beneficial for you guys as possible and to pack as much information into them in a very short amount of time, because we don't all have 30 minutes to talk about one market pattern. All right, guys, so remember, like, comment, subscribe, of course. Links in the bottom. We've got our Twitter. Come along, join us there. Great place to chat as a community. And our Telegram discussion, again, link there. Great content in there, market updates, trades, ECT. Get around it, guys. All right, we'll see you in our next video. We're going to continue with market patterns for a while until we finish maybe about 10, and then we'll move on to indicators and candles. All right, guys, take it easy.